At the first sign of a softening stance from the Fed, Bitcoin began what could turn into a full-blown corrective move. And on top of that, we have a Depeg event ongoing on USDT. So far, not so good. But have BlackRock just come to the rescue? Yesterday at 7 p.m. our time, the Fed gave the first piece of risk asset friendly news of the year. Bitcoin, for no reason, decided to just break down, unlike equities, which mooned, breaking its support, its trend line, and the 200-day moving average. Why? Well, it's not immediately clear. There's certainly a very high chance of a rate hike again in July. Currently, they've got it at about 65% chance. But we do have close to 6 weeks until that hike becomes a reality, and surely that would be enough time to make some long gains in Bitcoin. We've been waiting for this hope from the Fed for close to 16 months, and when we do finally get it, it's been soured by the possibility of further rate hikes, and this seems to have fed into the sentiment around the pause. Secondly, it's likely that the pause, which was widely expected, had already been priced in, although neither of these two thought processes would explain why price began such a negative corrective move, down over about 4% on the day. The most likely explanation is that the expectation of a price rise on the announcement of a rate pause was down to sellers using the expected pump as exit liquidity, i.e. picking a time when buy orders would be expected to rise to offload their open positions. Potentially, and let's be honest, it's also likely driven by the SEC's action against Binance and Coinbase. It's frustrating as technicals and the macro were slightly bullish concurrently for the first time in months. In terms of on-chain, there's little that explains the dump, but we have a good qualifier as to what type of breakdown we're witnessing. ASOPR gives us an idea if Bitcoin holders are selling at a profit, a loss, or at break-even. If the ASOPR is over 1, then sellers are selling at a profit, and if they're under 1, they're selling at a loss. Selling at a loss indicates a market capitulation, and luckily yesterday the sales output seems to have been just over 1, meaning that the sell-off, whilst not ideal, was at least logical and not indicative of a serious underlying problem in the market. With the markets edgy, we then saw some further instability as USDT started to lose its peg. Now this is way more common than most people seem to think. We can see that it regularly moves above or below its $1 target. However, because of the big movement in BTC, we saw a big reaction to this. The reason this does happen so frequently is because there's actually a very good trade behind it. Large investors go short on USDT as there's very little risk shorting USDT as it's incredibly unlikely to pump. Usually the risk of going short is that losses can be uncapped. These investors borrow and deposit huge amounts of USDT onto exchanges and show massive liquidity inflows of USDT and then convert it to other stablecoins or USD. This panics other investors into unloading their USDT, and then they publicize and promote that this is happening on Twitter and other social media avenues. Once USDT starts to depeg and fall below its $1 target, you see that lots of investors then fall in, news articles start coming out, basically undermining confidence in USDT's ability to maintain its peg. The initial traders will sell off for a profit on their short positions, often taking a long position as USDT service the withdrawal requests and bring the price back up to $1. Back to Bitcoin, technicals and the macro are all messed up. Not only did we have the relatively positive rate pause see us break down, we've also started to see a price bounce at around the same time that we got stronger than expected retail sales, which usually would indicate that inflation is going to flare back up. What could seriously move price though is the news that BlackRock have applied for a BTC ETF. Now, it's not immediately clear if it's a spot ETF, but what we do know is that A, they are partnering with Coinbase to deliver this, and that B, a spot ETF will be majorly bullish for Bitcoin price as it effectively makes Bitcoin accessible to traditional finance investors. We broke down Grayscale's court case against the SEC in a previous video that I'll link in the comments below. The SEC's ability to continually block a spot Bitcoin ETF will likely crumble against an entity such as BlackRock, who've got so much political sway. Bitcoin price is currently trapped below our broken lower trend line, and given the bullish BlackRock news and the fact that we've got our first glimpse of quantitative easing, I'd be tempted to pivot this lower trend line, which would keep us in a slightly bullish formation, something more akin to a bull flag. However, if we do continue to break down, I would short this and look to use the 200-week moving average just here as a price target. Join the Discord for our free trade signals, scalps and swings, and let us know what you think about BlackRock applying for an ETF in the comments below. Thanks.